Well, friends, we're going to look at the market rundown. Unfortunately, I just talked for 12 minutes, spitting fire to a muted microphone. It's definitely one of the best SPY videos in a long time. I was going really in depth. I'll try and replicate it. We'll do our best. So the S&P 500. Oh, this is so brutal. S&P 500 saw a bounce follow through. And what I like to do every morning is start the day. What I do is I do a whiteboard where I go through the 20 most popular tickers. I go through the biotech sector, the financial sector, the tech sector, and I write down a couple sentences about the technical setup. And that's to provide information to members, and it also gets me as prepared as possible for each trading day, looking at everything. So that's an hour of time before even thinking about the bell ringing, and that gets me squared away for the day. So what I like to do with my strategy is eliminate a direction, because I want to be trading with the direction of the S&P 500. I always want that market momentum at my back because it only helps. If I'm trading against it, yes, trades can play in the other direction, but they're less likely. If I want the odds in my favor, I want to be going in the direction the market is going. So I try and eliminate what's the most likely scenario on longer term timeframes as I head into the morning. Some days it's not clear, and those days I am less aggressive, and I might not even trade if I don't see a clear setup. Some days it's very clear and I will be more aggressive, and some days I can look in either direction if we have a tightening equilibrium range that we're watching. So in today's instance, we look at the hourly trend change. We're going to use SPY here because that's the trading vehicle. So we look at the hourly trend change on SPY this morning, because yesterday we didn't change the hourly trend. We were tightening up. We had a double bottom, inability to break bull because the bell rang, and then after hours we did see the bull break. So that might be a misleading signal to act on. And you say, oh, the hourly trend changes, we're bullish today. But you have to look at all time frames, and zooming out to the 4-hour time frame this morning had me looking for a 4-hour lower high to be set. Due to the magnitude of the drop on Thursday, or yesterday, what day was it? Friday, due to the magnitude of the drop on Friday, we were looking for a lower high to be set, because the odds that we see just a straight up recovery to higher highs is very unlikely. And again, this is just something that you get from looking at thousands of charts, tens of thousands of charts, and tens of thousands of hours. You build up this mental library of what is most likely to happen. Doesn't always work out, but that's where you get your edge. So we were looking for a 4-hour lower high, and this was magnified my belief of a 4-hour lower high just looking at all these individual major names. So Amazon, V-shaped recovery, looking for a 4-hour lower high. We had names like Netflix in the same setup, looking for the 4-hour lower high. And we had NVDA, the tech sector as a whole, QQQ, just looking for 4-hour lower highs. So that tells me that looking for bullish entries on a gap up open when a 4-hour lower high is likely to form is not a good risk to reward scenario. So I can eliminate bullish plays for today. If the bulls buy all morning, I can say, oh, I was wrong. I lost $0. My trading strategy these days, when I'm wrong, I leave money on the table. I'm not losing money. So that's more of a cautious standpoint, but I would much rather miss out on a play as opposed to over trading and losing money. So we were looking for a 4-hour lower high. What we do is determine the most likely scenario on the longer term timeframes, a 4-hour lower high, and then we look for clues. And it's important, obviously, to remain unbiased. I can't be making up clues and saying, oh, this is a reason, or going to indicators that I don't normally use to try and find reasons to be bearish to look for the 4-hour lower high. I just sit and wait for my normal signals, and if we don't get them, again, then I just don't trade. But we had a strong start to the day. We consolidated. Lack of follow through by bears, seeing supports break on the 5-minute time frame, so it ended up being a little bit of a 15-minute bull flag. But the change in trend on the 5-minute time frame is the first indication that our 4-hour lower high has been set. So we had a head and shoulders pattern on the 5-minute time frame. Support broke when this support level of 281.39 broke, because we then go from low of the day, high of the day, higher low, higher high, higher low, lower high, lower low. Look at the back test and rejection of resistance to the penny, previous support acting as resistance, rejecting the price down to a new low of the day. So from there, it was just 5-minute downtrend for the next few hours, following through with the 2-hour lower high being set. From there, as we got towards the end of the day, I looked at the hourly time frame and I said, all right, we've been pulling back the entire day. It's on declining bear volume. If it was increasing bear volume, I'd say, yeah, we can dump all day. But because it wasn't, I was looking for a bounce before the end of the day. It was 2:30 p.m. We have 90 minutes left in the day. So in the chat room, I said, keeping an eye out for a bounce before the end of the day. And at that point in time, we were literally on these candlesticks here. There was no indication of a bounce. It was just looking at the longer term picture, determining what's more likely to happen, and then zooming in and looking for examples, or I should say shifts, telling me that it is playing out. So at that point, when at 2:30, I typed that in and I looked, all right, this is a clear 5-minute downtrend resistance line. And I don't usually use RSI trend lines, but it was this clear, I had to. So RSI hitting 30, and that's another point. Looking for a bounce by the end of the day, the RSI levels are not getting oversold on even the 5-minute time frame. So we hit 30, lower high. It's almost a descending triangle, which is lower highs and a horizontal base of support. It broke right here on this candlestick. The downtrend broke. Then we just saw a 5-minute higher low, higher high, higher low, higher high, with the bounce following through at the end of the day. So that was a signal affirming, looking for the bulls to try a bounce attempt at the end of the day. So we then have an hourly tightening range to be watching into tomorrow. So we'll have to see how this plays out in futures trading, but we have our high, low of the pullback, and we're looking for an hourly lower high to be set. If this hourly trend or this hourly tightening range breaks bearish tomorrow, we zoom out to the 4-hour, and the bulls must form a 4-hour higher low compared to the low of yesterday, because we need to see a 4-hour equilibrium, because if we just drop down to a 4-hour lower high and lower low, we lose the daily uptrend on SPY. So break that hourly equilibrium bear, we look for the 4-hour higher low compared to the low of yesterday, a must-hold level for the short-term bulls. If that hourly equilibrium breaks bull, then we're still looking for follow-through up towards that recent resistance of 285.18. So first things first, we're watching the hourly pattern break, and then we'll zoom out to the 4-hour once that break does occur. Another example of that, NVDA. So we look for a 4-hour lower high to form on NVDA because it's a V-shaped recovery at this point, and we pulled back so significantly the odds of an 8% bounce straight to higher highs after losing support levels is not likely. So what's the first indication that our 4-hour lower high has potentially been set? The answer is a loss of momentum or a loss of trend on the 5-minute. We started with a 2% explosion from the low of the day to the high of the day. We established a 5-minute higher low, a lower high. We lost the 5-minute uptrend with a break of 179.65. That is your bear signal, first signal number one. That's a potential top fishing play at that point. So for both SPY or NVDA, if I see the bear break on the 5-minute time frame, I enter a bear trade anticipating that's the first signal of the 4-hour lower high, and I put my stop loss below the high of the, or above the high of the day. Because that means if I'm wrong and we see continuation, that tells us our 4-hour lower high has not been set yet, and I want to be out of that trade because I'm wrong. If we don't get stopped out, then we're right and the trade follows through. So that's a top fishing play scenario, waiting for a shorter term time frame to show the initial weakness, and then looking for it to fit into the most likely scenario in the broader, longer term time frames. IWM, 4-hour bounce, we're looking for a lower high to form compared to 156.06. And the daily time frame at this point, pretty decent little bounce there, but we need to change the trend. We're in a lower high, lower low pattern. Anything under 156.06 is just a lower high on this bounce. So we're not anticipating the bulls to be any kind of heroes here and get right over that resistance. We're anticipating that if these bulls are going to change this daily trend, they're probably going to need to form a lower high compared to 156.06, a higher low on the daily, and then change the trend. Otherwise, we are still in a daily downtrend. So that's what's going to be required, in my opinion, for the bulls to change this daily trend into next week. QQQ, not the kind of convincing follow through the bulls wanted, but again, this is an extremely strong chart at this point still, and the close that we just saw is pretty much the highest close we've seen, the third or fourth highest close we've seen on this entire move since December. So the tech sector is still fine at this point, but it's the same thing, the 4-hour time frame. We need to see the bulls form a higher low and a higher high on the 4-hour chart. Looks like our 4-hour lower high was set. Some consolidation at this point, and it all depends on how this hourly tightening range breaks. If tomorrow is just a lower high and lower low on QQQ, if we break the low of today tomorrow, we need to hold 176.93 for that higher low. The last thing the bulls want to see is that 4-hour lower high and lower low changing that longer term trend. Some names like Apple already broke bear. So Apple on the 4-hour, there's your head and shoulders pattern following through. Left shoulder, head, right shoulder, 4-hour uptrend is lost. A little bit of a news event behind that. Google also lost it. Lower high, lower low. Google and Apple clearly stood out yesterday as the weakest tech names out of the major tech names we follow. Amazon and Facebook clearly stood out as the stronger tech names. So right now we have QQQ in the middle here because the Amazon bulls, look how much space Amazon has to work with on the 4-hour. They can very easily form a 4-hour high or low. So QQQ's in the middle because you have some really weak major players and some really strong major players, so there's a bit of a balance. So we're watching for the 4-hour tightening pattern on SPY and QQQ. The financial sector at this point is a daily bear flag. It's up to the bulls. The burden of proof is on the bulls to negate the daily bear flag. To do so, I'm going to need to see the price get over the 4 and 8 period exponential moving averages. Those are my guides for flags. And right now they're not. They're testing those resistances. And if we reject here, it's a bear flag. So the bulls, I would say the bulls need to clear 25.80, another 1% to the upside to get enough bounce to negate the possibility of this bear flag. The hourly bull move today broke resistance by 6 pennies and then saw no follow through and then double topped at the end of the day. So at this point, the hourly trend change with a lack of follow through gives us the bear flag setup. That's when you have a trend change with a lack of follow through, zoom out and look for a flag. So the bulls could show up tomorrow, break 25.59, and then we're looking all the way up at 25.89. There's a lack of resistance there. So it's up to the bulls tomorrow to negate that daily bear flag, because if we don't, the market bulls, the last thing they want to see is a daily bear flag now that RSI levels have all cooled off here, and we could see another financial sector leg down. So tomorrow's an important day for the bulls to try and alleviate those fears by seeing a 1% move to the upside. Pretty tall order to fill, but that's what the bulls need. Biotech sector stood out as the lead bull. The sectors I watch as I do my whiteboard every morning and I prepare my game plan, tech sector is about 20% of SPY, major holdings in the major weight in the S&P 500. We've got financial sector number 2 at about 13%. These levels fluctuate. And then number 3 is the healthcare sector. I track XBI rather than the healthcare sector, so biotech rather than healthcare, because they pretty much trade tick for tick. They're extremely correlated to each other. And I like the LABD and LABU 3 times leveraged ETFs. They're great trading instruments for the biotech sector. So because XLV does not have that kind of liquidity and that kind of trading opportunity with leveraged ETFs, I chart XBI. So we have a daily equilibrium for XBI. Our higher low has very clearly been set with the follow through on this bounce. And I just missed nailing that entry, but I did get stopped out of that LABU position yesterday. But it's going in my memory banks, and I'm just going to tweak that stop loss a little bit next time and nail it next time. So we're looking for a lower high to form compared to 92.91. I'd love to see this lower high pull back for a higher low and then an equilibrium break into next week. I don't care which direction it breaks. I prefer just tight equilibriums. The tighter the better, because the follow or the breaks are more clear and the follow through is usually more significant. So that's on watch for next week, watching for it to continue to tighten. VIX pulling back in a huge way. So pretty much the fact that SPY didn't fall apart the last couple of days, in my opinion, is a risk-off scenario. I think bears got a little excited that that inversion curve narrative or inversion yield inversion narrative would stick a little bit more. We also had, the lack of the Mueller report being significant. But either way, we can look at a tightening range here with the high, low, lower high, and we're looking for a higher low compared to 1240, the recent low. So pretty extended to the downside. So the volatility bulls are going to probably be looking for a potential entry into tomorrow. Again, 4-hour time frames. Let's see if it's clear here. High, low, lower high, scouting a 4-hour higher low. Oil all bull today, but we do have a double top to be aware of. Inventory report is tomorrow. Double top to the penny at 60.37. Hourly higher low is 59.66. If we break that level before tomorrow, the odds of a daily bull break will decrease. But again, it all depends on what the inventory report says. So clear resistance. And at this point, the most important support midterm on the daily is 58.15. So 58.15 support, 60.37 resistance. We've been within this range for 7 days at this point. And the question is, can the bulls follow through tomorrow on the inventory report to break that resistance? Natural gas, 0 follow through for the bounce attempt. So certainly wasn't believing it. And the bears showing us we shouldn't be believing it. So still watching weekly consolidation at this point, still patiently waiting for a weekly higher low to form. And this bounce, we're just looking for a lower high compared to 289. That's where we stand. Appreciate you watching. We'll check back in tomorrow. Do good things. See you soon. So now we're in Canyonlands National Park, which is just a couple hours away from Arches National Park and near Moab in Utah. They're all fairly centralized as far as road trips go. So this is another great spot. Nice picture. But this is the kind of spot where it's so expansive and it's hard to believe your eyes when you're looking at it. It's almost like if you were an ant and someone took their hand and put it in some soft sand or some wet sand and left a hand imprint, and that's what you're looking at, because you're up on this overlook and it's just this huge expanse in front of you, but there's these crazy rock formations where water has just carved away over millions of years and eroded, and you could definitely mistaken this for the Grand Canyon in some ways, blurry lizard friend, in a hole. That's a much better camouflage, dude. That's my National Geographic shot of the trip. Good camo. These are those handles, footholds and handholds carved into the sandstone just from usage from the Native Americans thousands of years ago. So really cool to see those still there and to see the paths that they walked on a daily basis. This is where a meteorite crashed, I believe, in the area. And you can see all the different minerals and elements and sand way different there where that crash took place. I want to say that they think this might be the one that took out the dinosaurs, but I don't remember correctly. Gonna have to double check that one, but just a really cool big drop down with some cool colors right off the side of Canyonlands. And there's the rivers carving their way through. And definitely the most epic sunset of the entire trip. Again, just not real. Up to the rocks, it looks real, and then it just looks like a big old painting like they used to do in older movies for backdrops. But yeah, you could watch that every day. There's your meditation. Just sit and watch the sunset for an hour every day. That's all you got to do. So let's see from there, camped there that night, and the campsite, as far as the park goes, is literally like, a walk away from this overlook. And there was a German family, fairly younger couple. They're probably in their early 40s, and they had a kid with them who was maybe 6 or so. And they were biking from Canada to Mexico. And this was maybe a third of the way there. And they didn't have a spot to camp, and it was just me by myself in my camp spot, and it was the designated sites in a developed camp spot. So they asked if they could join me, and I said, sure. So nice to meet people, as always. There are so many Europeans in our national parks. If you go in the summer to national parks, you're going to be looking at, 90%, maybe that's a lie, 80% Europeans, because the national park system is fairly world-renowned. And the United States, as far as what our government has done, I'd say if you have to mark up, top accomplishments, the national park system is definitely up there. So people come from all over the world. They have all different ethnicities and races. And, walking on popular trails, you hear multiple different languages spoken and usually nice and very friendly people. And when you're walking on a trail, make eye contact with people and say hello. It's always awkward when you're just staring at the ground and intentionally avoiding eye contact. There's no reason to be afraid. You can smile at strangers. We'll see you tomorrow.